The CPI report just came out and it's piping hot. I mean, sizzling red hot at 9.1%. Even the consensus estimate of all major banks across the United States was 8.8%. It's pretty crazy that we surpassed that with 9.1%. Now, this is the worst inflation that we had, yet again, in over 40 years. But not only is it the worst inflation we've had in 40 years, it's also the worst 1 month increase that we had in also over 40 years. Consumer Price Index for all urban consumer increased 1.3% in June on a seasonally adjusted basis after rising 1% in May. The U.S. Bureau of Labor and Statistics reported today over the last 12 months the all items index increased 9.1% before seasonal adjustment. Now, it's very important to break down what is what. There's something called core inflation and there's something called inflation. Core inflation is everything minus food and gas, which happens to be going down, while all-around inflation happens to be going up because food and gas accounts for the majority share of the consumer price index or all inflation in the United States. Gas, energy alone accounts for 35% of consumer price index. The increase was broad-based with the indexes for gasoline, shelter, and food being the largest contributors. The energy index rose 7.5% over the month and contributed to nearly half of the all items increase, with the gasoline index rising 11.2% and other major component indexes also rising. The food index rose 1% in June, as did the food at home index. The craziest thing is, food at home is something that you cannot affect. You could only buy non-brand name food in the stores, right? You shop like the local store brand so much. That's how you cut corners. Luxury items like watches and houses and cars, things like this, yeah, going out, even cars, you can buy a bus pass in major metro cities. But food at home, that's a huge thing because people are suffering, right? That's something they can't affect. The index for all items less food and energy rose 0.7% in June. So the entire energy index rose 7.5%, and only around a tenth of that in June was just for everything minus food and energy. That's pretty crazy, right? We see the absolute necessity to bring down inflation, but specifically for food and gas. That's like the main thing over here. Now, this is what's interesting. The all items increased 9.1% for the 12 months ending of June. The largest 12-month increase, the period ending November 1981. The largest increase in over 40 years. The all items less energy and food index rose 5.9% over the last 12 months. The energy index rose 41.6%, guys, 41.6%, which means that you lost half of your buying power when it comes to energy overall, which we'll go over in a moment. And this is the largest 12-month increase since, again, 1980, over 40 years. The food index increased 10.4% for 12 months ending June, the largest 12-month increase, the period ending February 1981. We are hitting record highs. This is the actual index. On the left-hand side, you're going to see the month of June, and on the right-hand side, this is adjusted for 12 months. On the right, I want you guys to pay attention to something very interesting called energy. Energy accounts for 41.6%, went up. Energy commodities, 60%. Gasoline, 59.9%. This is a very big one. Fuel and oil, up 98.5%. Now, it did go down 1.2% last month, but still up 98.5%. It's ridiculous. Let me show you a chart, though. Just for you guys to have a visual, this is over the last 12 months. June 2021, 0.9. Then we had 0.5, 0.3, 0.4, 0.9, 0.7. And then from 0.7, it started going steady down. 0.6, 0.6, then up 0.8, 1.2. That was the record before this crazy 1.3. Then we had that April report where it actually went down to 0.3. We were very hopeful. Then it skyrockets 1.0 to last month of 8.6. And all of a sudden now we have this crazy 9.1 of 1.3. This is a very important chart right here that you guys should definitely take a look at. In red, this is for all items less food and energy. In blue, that's literally for everything. As you can see, since March, the all items less food and energy is going down. March, April, May, June, it's steadily going down. This is what the Federal Reserve likes to look at more than inflation in general. I don't know why they remove food and they remove energy. I think it's just like a vanity number, but that's what they like to look at more. So although all inflation is going up, inflation, if you take out food and energy, is going down. But food and energy, specifically energy, is what accounts for crazy inflation. The energy is the reason why all of these other things is expensive, right? Delivery costs, heating goods, restaurants charge more money because they have to pay more money for produce because the production company has to pay more money for delivery because of gas fees. You understand? It's very, very interesting what they put up over here. Now, everything is obviously down, right? NASDAQ is down 2% pre-market. Everything is down. Palantir, Bitcoin, Nvidia, Unity, Neo, Tesla, literally everything is down. You can't even buy an index fund unless it's a reverse index fund that's up. But I want to bring your attention to something very interesting. This is crude oil. If you go 5 years back, we're 100% up on the price of crude oil. It used to be $46, now it's $95. If you go 1 year back, we're more expensive. It was $75, now it's $95. However, when you start going 6 months back, we're only 16% up. 1 month, we're actually down 21%. And for 5 days, we're actually down 9%, which means that oil is starting to go down. If oil is starting to go down, there's a lagging indicator, which means that if oil is currently down, that means that the next CPI data and the one after that is probably going to be lower, not 9.1, probably going to be in the 8s or in the 7s. This is the theory of what people are thinking. This is the consensus. But again, consensus doesn't mean anything because everybody thought that the rate was going to be 8.8%, but we got 9.1%. But let me show you something interesting. This is the 6-month chart of oil, right? Crude oil. If you look at the point right here, remember everything is trailing. If you look at around the point right here, right in June, you could see that the price kind of went all-time high to 120. Not all-time high, but recent all-time highs to 120. And since June, the numbers have steadily been going down, right? I'm not making this up. This is a fact. Since June, the numbers are starting to go down, which means the entire month of June, the prices started going down. And we're probably going to feel this in the next CPI report. Who knows if I'm right? Who knows if I'm wrong? Who knows if the experts know what they're talking about? Honestly, you ask 100 people are going to give you 100 different answers. The only thing you can do is look at things around you. Are prices starting to come down? In my personal opinion, yes. Luxury item prices are starting to come down, which means this is going to have a trickle-down effect. Now, inflation was not gotten overnight, and inflation is not going to leave overnight. Things take time. But the same way that people were not prepared for inflation, and inflation just hit us, and now all of a sudden everyone's talking about it, but nobody was talking about it, for the last 6 months. Relatively nobody. Same thing is going to happen when inflation is going to go away. Inflation is going to start going down eventually. I don't know when. Eventually, I have my ideas. And people are going to say, oh, that's not the real facts. It's going to go up next month. Then next month, inflation is going to go down. People are going to say, nah, that's just a glitch. Dead cat bounce. Inflation is still going to go up. Next month, also, inflation is going to go down. People are still going to say, no, inflation is going to go up. Eventually, inflation is going to go down, eventually, and the market is going to come back. Your job as an analyst, we're all analysts, right? You have to analyze your own portfolio. You have to analyze your own economic life. Eventually, it goes up, and you have to analyze before it goes up current conditions. Micro, macro, current, past, and future conditions as per what you see is going to happen. Now, it's almost certain that the Fed is going to raise 75 basis points at the FOMC meeting, which I'm going to also film live on my channel. After that, there's no Fed meeting the month after. There's no Fed meeting in August. And there's going to be a Fed meeting in September. If CPI happens to go down next month in August, and then next month in September, the meeting probably is going to have 50 basis points. And the meeting after that is probably going to be 25 basis points. The second the Fed starts lowering the federal funds rate or decreasing the amount that they're raising the federal funds rate, this is when the market is going to start rallying, in my personal opinion. But you need to prepare for this before it actually happens. And that's all you can do as a smart investor. This is a tracker for gas prices. It's very easy. Just type in gasprices.aaa.com. Very simple. The current average is $4.63. Yesterday's average was $4.65. So it keeps going down. It doesn't seem like a lot, but it is going down. A week ago, the average was $4.77. Well, a month ago, the average was at $5. The price of gas at the pumps is going down. This will be felt by big box retailers. This will be felt by a lot of huge corporations. The prices eventually are going to go down. I don't know if this is the start of it. I'm just saying that there are some things around in the economy. If you track crude oil, if you track gas prices, which I just showed you, and we just went over it, right? Energy, gas is worth over 35% of inflation. So if we can get gas prices under control, then inflation is going to go down as well. And if inflation goes down as well, the Federal Open Market Committee is not going to raise rates as aggressively, possibly even reducing rates in the future. And when that happens, that's when you're going to get a bull market when it comes to crypto and stocks. And you just got to prepare for that in advance. Everything I'm saying is personally my opinion. I'm not giving you guys financial advice. 100% purely entertainment and educational purposes. A lot of people are going to call me a clown. A lot of people are going to laugh at me, and that's okay. I'm just giving you my own thoughts. Everything I said kind of makes sense. All you got to do is connect the dots. Thank you, and have a great day. Don't forget to subscribe. I put in a lot of work into these videos. Have a good one.